Okay, well, let's jump into real estate, Matt. As listeners remember, you are working on one of our newest initiatives here at the Motley Fool in Millionacres, and you're helping bring the world of real estate investing to our members in new ways. And real estate investing is very much in line with the financial stuff that we're talking about every week, and so we're really trying to incorporate more of this into our shows because it's a fascinating subject. It's one that I enjoy talking about. It's one that you know a lot about. And this week, we wanted to talk a little bit more about crowdfunding's role in real estate and how it works and how this plays out for everyday investors like our listeners.
Sure. Well, here, I'll give you kind of a simplified explanation of how this works. Let's say that an experienced real estate developer finds this rundown hotel in like an old part of town and can buy it and renovate it and sees the opportunity to make a big profit. Let's say that they can acquire the hotel for $10 million. A bank might be willing to fund, say, 7 of that. If this developer, which is known as the sponsor in this, would not want $3 million of their own capital tied up, they can approach investors to kind of raise the money from individuals. They usually put up a little bit themselves, but so they can use investors to raise the rest of that money in exchange for a share of the profits.
Nice.
So similar to a REIT, except a few big differences. One, it's a single asset usually, like a hotel that they'll buy, then renovate and try to sell it, say 5 or 7 years later is a usual time frame. And that's the other big difference. There's usually a planned exit strategy.
Yeah.
So there's a few reasons you would want to do something like this. Number one, the return potential is off the charts compared to just, general stocks. A lot of these deals target rates of return in the 15 to 20% range. And although it's a pretty new industry, the early indicators are that it's pretty successful. On CrowdStreet, which is one of the most popular platforms, I think all but 2 or 3 of their deals that have been complete so far have beaten 14% internal rates of return.
Wow.
A handful have done over 20. So there's money to be made here. That would 20% rate of return would double your money in roughly 4 years. So
it's not too shabby.
No. So there's a lot of money to be made here. It's a good way to add diversification to your portfolio. This is a type of real estate that until recently had been inaccessible to individual investors on a single property basis. You could buy a hotel REIT.
Yeah.
But
that's a collection of a lot of different hotels usually. And yeah.
Right. It's not buying one asset with some way to add immediate value and then flip it at a profit. That has been inaccessible to individual investors throughout most of history. So there are some drawbacks to this. I mean, obviously it's a riskier asset. Nothing that can produce a rate of return of 20% or so is without risk. And this is certainly not an exception. So whenever you're trying to add value to an asset, there's a big element of execution risk. If you're planning to renovate a hotel and then sell it at a higher price, there's a lot of things that can go wrong in that strategy that wouldn't go wrong if you're just, say, buying hotels and renting them out and bringing in income.
Sure.
So added risk is something investors want to keep in mind, and liquidity. Generally, when you give one of these your money, it's tied up until the deal is completely done, until the hotel is bought, renovated, then eventually sold, or office building or strip mall or whatever you happen to be investing in. So and there's not really a secondary market for this. Like if you buy a REIT, you can sell it at a click of a button if you want to.
Yeah.
If you buy a, say, rental property, you can list it whenever you want to. It might take you a couple months to sell it, but you can sell it pretty much whenever you want to. With one of these, you really can't. You're pretty much tied up for the duration. There's no real secondary market for these. There's some interest in some of the platforms of creating some sort of market for these, but in general, if someone's targeting a 7-year holding period, be prepared to be locked in for 7 years.
Sure.
So it has its ups and downs, but it's a really exciting new way to invest in real estate that the early results have been very promising.
Yeah, I mean, real estate traditionally for a long, long time has been extremely prohibitive just because of the requirements needed to get in, right? You need a lot of capital. I mean, whether you're trying to buy your own home or whether you're trying to buy a hotel or whether you're trying to invest in some sort of real estate consortium. I mean, it all comes down to that bottom line of you need capital, which makes it a lot more difficult. But it's really nice to see in this crowdfunding age that you're seeing options like this come online because, I mean, real estate, generally speaking, is an attractive investment. I mean, it's generally fairly reliable. Historically, it more or less kind of tracks the rate of inflation. There's some outliers there, and certainly we can think of the early 2000s where there was a little bit of a spike there. But for the most part, I mean, I do like. I mean, real estate is a part of my investing philosophy. I mean, my investing strategy. My wife and I own. We're homeowners, and so that equity that we build up in that home is something that we are looking at down the road as part of our strategy later on in life. So, but yeah, I mean, to get there, it kind of took a little while to save up some money and actually get that home. And so it's nice to see that this is opening some doors for investors. And of course, folks with more questions, you can go check out millionacres.com and all of the stuff Matt and the team are posting over there. And of course, you can always fire your questions our way. And we'll be happy to take them here on the show as well.